Video 2 of 3 on 9/15. Devon, good company, good management, consistent P&L, and falls like it's going out of business. What's wrong with this picture? What do they know that we don't? We, as in the bulls. Why would they lose? Why would they lose 40.5? All these questions you should ask yourself. Are you telling me they want to close all the gaps down to 32? So let me put it on my trading list here. Do I want to? Okay, I'll add it. Why does such a stable company trade like this? So I'm going to do a deep dive on its fundamentals, see if I can get an idea why is it falling like this. If you guys know, let me know. I would be interested. Rallies are going to be sold into 43. So if I will go long, I would sell puts to own shares. If it pays a dividend and you want to get into a good dividend paying stock without having to chase it up, this is how you do it. You sell puts with confidence to get assigned shares, and then you start selling covered calls immediately, and then you get the dividend. Anything below 36, I think, would be a good start to eat away at this. Pretty strange. You could hold calls as well if they're deep in the money or shares. If you want to start half of a position in Devon shares or deep in the money calls and sell puts to own shares, combination, you can do that. Just make sure you use option strategies that are good. All right, DXCM, I did ask people to come back to me and nobody did, so I never followed up with a trade, I don't think. Awesome P&L on paper, and it fell 40%. That cannot be a hasty fit from Wall Street. There's something else going on. Mind you, this is cheap now. Price to sale of 11 yielded this rally. Price to sale of 11 yielded this rally. Price to sale is, last I checked, below 8. So they need to get out of 71.50. They can probably get another $3 to $4 to create the momentum upwards. If you bought the dip, I get it. Just manage your risk accordingly. Hopefully you did it in a way that is not very time sensitive. It's on my to trade list. I just don't know enough about it. I was hoping I'd sell puts in it, and maybe on the next red stent, I would sell puts in it. How about I put an alert here just for giggles? Move it up a little bit. ELF, it's a long, good P&L falling into prior support. The support is a band. It's pretty wide, so selling a put would be the best way to do it. Selling a put spread, second best. Buying calls, least favorite. Buying a call spread of sorts, combination with a credit put spread would be making sense. Buying a position in shares, partial position in shares also works. So makeup is not going anywhere. It's just the price action. So they lost necklines and they have downside targets to be met, which can be around 85 or 82. So this could lose $20 to $30. So be careful to leave room for that scenario. Enbridge, not an obvious entry point. If you look left, this is a area of sellers. One peak, two peak, and a bunch of other ones above it. So good improvements, but you're running into an area that has proved itself fatal before to the momentum. Not an obvious entry point. A dip towards 51 would be better. Phase, I wouldn't touch it. I'm telling you, the market is changing. I wouldn't touch it. A solid base on the chart. So that's not the reason I wouldn't touch it. What is going on? Their sales are cut in half, maybe? So what is going on? Let's see how this trend goes. So from an investment perspective, if I own shares, I'm not adding. From a trading perspective, yeah, it's tradable. It's above support and below resistance, so you could get to 120, but that would be an exit zone, just like I said to the other person trying to chase it here. They had a positive reaction to the earnings when the earnings were just absolute, can we cuss? Absolute crap. We're not going to cuss. The earnings were absolute crap. And the stock rallied. On the same week, another company, I think maybe NVDA, reported earnings that were pristine. And that stock falls. And this one, I forgot what company it was, but it was on the same week. I don't know, Jack. I mean, that's one scenario maybe about Devon comments. EOLS. Medical aesthetic treatments. Hey, that's not going to go down interest. Buy the dip. Chasing it up here, you're chasing. If you're good at chasing, go right ahead. Just, oh, okay. Yeah, not for me. It could get to 21, but it's going to have to do it without me. If you're a momentum trader and you know how to buy high and sell higher, and you're chasing the breakout and you're not investing, go for it. If I'm investing and I'm stuck at 21, I would be looking to exit. This one is probably going to 32 next. It's not an obvious point of entry, people. I mean, is this the same person asking these questions with these companies? Okay, so this is a weekly chart going back until 2001. Here's the statement. Since 2001, anybody that bought it above 36 got stuck for years. Okay. Ford, I wouldn't touch it. I don't know what's going on with the car industry in the US. They're all car makers. They're either stupid or they think we're stupid. When they said, yes, we're switching everything to electric and non-fossil fuel, I was asking questions and I was labeled all kinds of things. And now they're all back to saying what I was saying. It's like there's no getting away from fossil fuel right now. It's going to have to be a hybrid system of sorts. To call for them to commit within 10 or 15 years from 5 years ago or 3-4 years ago or whenever they did it, that they're going to come off of fossil fuel. I thought that they for sure had something in the bag. Like they had something they hadn't announced. Turns out, no, they didn't. They were just being political. And so the stock is tradable on dips. It's investable if you believe in the company. I don't believe in the company. A management team that says the things they said in the last 5 years of all the car companies, I'm including Mercedes, BMW, all of them. I don't want to put my money in their pockets. Not a penny. You guys have something going on in your head that I don't believe. So technically speaking, buyers at 950, sellers at 1250. You can ping pong that range. Investment-wise, good old American company, I sent that trade out 8 years ago, and it was a massive win. I think it was at 7, and it went to high heaven, 27. So if somebody followed me because I said, I want to go along a good old American company. And it was, I believe, one of the first trades in the starter package on the Benzinga. And, it's through the roof. GE may have been the second one. So it's a decent entry point from that perspective. I just don't believe in their management. Well, Echo, no, they did not have to comply. We still live in America. They did not have to say anything. They went overboard with that message. Anyway, nobody asked them to commit within a 15-year. It wasn't doable. Physically, it wasn't doable. Anyway, good company from that perspective. It has a lot of fans. Buy the dip. I'm okay with it. Investment for the long term. I'm okay with it. I question the management team. Maybe it's a current management team situation. I also know there are sellers above 13. And if it does spike above 15 or 18, I would take advantage of the spike, exit, because I know they'll have another crisis, and then you'll have the opportunity to re-enter. FCX, those 3 white lines will matter much again, and it looks like they needed to hold them, and they didn't. 46 would be a number I'd be interested in. 46, that would be an exit spot. And if the bulls can break out of it, they can probably get to 52, and I would double down on the comment to say that I would be exiting up there. The downside target on the left, the white one, look how accurate it's been twice. So that tells me that if you lose the pinpoint of that arrow, so if for whatever reason this stock falls below 39, it probably goes to 33. That would be a pretty good buy to dip moment. Frontline. What do they do? Shipping. Okay, solid bottom line. Weird sales fluctuations on the quarter. head and shoulder-ish pattern. It looks like they lost the shoulder. So let me say it this way. If they don't get back to 24.5, they're probably going to 19 or lower. I say lower because there's the head and shoulders at 23. That's $5.50 of downside risk from 23. You do the math. Okay, so if you want a visual, I'll give you the line that matters a lot. This is the head and shoulders. Downside is this much or this much. So this one is probably exaggerated, but I drew it anyway. So somewhere between this and that will be a nice entry point for longs. I'll put an alert there. I don't know what they do, but I'll learn. First Solar is probably the only solar company I would trade or invest in. This here, 190 was target 2 of this red W. I knew it was a short way up there. I missed the entry, but some of you took the short based on my comments. We had discussions on it days on end. Buy the dip moment. Anything below 190 has heavy support. The problem is it's $50 worth of heavy support. So 190, 150, 140, it's all support. So make sure. The way I would trade this is on really bad weeks. Sell puts to own shares, and that's the best solar company from a perspective of cash and all of that. Most definitely not an obvious entry point. All you got to do is look left. Yes, of course, above 82, it will have the moon, but what are the odds of that? Good P&L though. Use dips to get exposure on the long side. I mean, it must have good puts to sell on bad days. Solid performance in a shaky conviction market. FUTU. I'm not sure why we're dealing with FUTU, but it's a pretty small company. It looks like it's approaching solid support. Anything below 454 looks like they love it. So you can count on it as being support. And solid resistance at 64. Now, if you take out 64, you could probably get another $3. And if you lose 52, you probably go to 45, which would make an even better entry point if you know the company and what they do. So solid P&L should make for good opportunities to buy dips. Gold, okay, the person asking, what are you asking me? What are you asking me? Tell me. I would love to know. So gold, buy the dip. What can I say? I honestly don't know sometimes with the questions. I should go back and see if there was a question in it. All right, so if you're a technical trader, you're about $30 late, $40 late. The breakout was from 24.60, 62 on GC. If you're looking to short it, fine. Short it using options on the futures instead of shorting the future contract itself. That would be probably safer, more finite amounts of money there. If you're looking to go long because of the breakout, fine. It's not a thing I would do. I would use the next dip. They broke out, wait for a red day to get long. Why are we rallying like this? I bet you the words out of Powell this week will move gold a lot. Up or down, I'm not sure. So you should know that there's a catalyst this week. Artificial move, up or down, I'm not sure. GE, go all in, all in. No, don't. I'm short GE via sold call for months, and it's played out. I think this week I added a put. I bought a put after a long time of silence. I'm just picking a fight with the narrative. My concept is that the stock price is confused because the company has been carved out. I don't think anybody knows what's left. Like I ask, why are sales falling? Like why are sales now 9 billion when 2 quarters ago it was 19 billion? It can't be a seasonality thing. I mean, that's a big drop. Oh, they split the company. Yes, but in my experience, when they split the company, and I'm asking for somebody to come back and debate that point, but nothing, silence. If I had a company and I spliced it, I would carve out everything that came with the other company that I took away. Like, I would not include sales that just went away with a new company, unless there's some sort of ownership with the company or something like that. Anyway, if somebody can explain it to me, that'd be amazing. Until then, I don't like the stock chart. I believe this is 2008 failing levels, and that's what I'm shorting. I'm shorting this stock with an underwhelming P&L going into an area where people have been stuck since 2007. So if I was an owner of GE stock in 2007 up here, I would be out. It took them 17 years to get their money back. I think they would sell in droves. So it's not a starting point, and therefore I added to my short. I didn't announce it, I don't think, except in the live room, because the entry was not that scientific, but you just heard why. It's a rally into a prior long-term fail. GLD, everything I said about that other company, GC, not other company, about GC, applies here. I think it's more likely that we will have a $8 dip in gold than an $8 rally from here. And if we are having an $8 rally from here, there's something major going on in the economy. Good or bad, I don't know. That's all I'm saying about that. So I believe I'm short gold by selling a call or a call spread. And I'm pretty sure this week it went under fire. Maybe I'll close it for a loss. Maybe I'll keep it for a couple of days and see where we end up. I know it's for December, so we have time on the clock. And that trade was winning, by the way. All right, GME, what are you asking? Hopefully you're just trading. $22 or above, sell zone. You better hold 19. 19.2. If you lose 19.2, you go to 17 and change or lower. The company is going out of business. That's what the P&L says. Quarterlies. Anyway, be careful investing in this company. Trading, that's great. Just pop into the live room. We'll trade it. Alphabet has been underperforming. It did have a good end of the week, but only to run into resistance. I did not add the R today, so these are comments from before. It hit my target almost perfectly, hand-drawn targets from before. So it hit it the first time. I copied and pasted. I said, what if it happens the second time? And it did. And it hit support zones perfectly. And it bounced off of them also perfectly. So you see this comment here. It says 5-3. So that's May 3rd insanity. May 3rd insanity. I don't say those words often, especially in a stock like Google. Therefore, it is not an obvious entry point. Again, next time, buy the dip. Home Depot. Not an obvious entry point. Just ask these people, hey, how did it work out the last time you bought the stock up here? So if you're interested in this momentum, because they are having higher lows and higher highs, well, time it accordingly. Just buy the next dip. It may not come, and then you missed it. Don't be, well, I don't have a problem missing it. There are thousands of stocks I can trade. I don't remember my put strike. Ask me during the day. I'll give you all the details on GE. HIMS. Good business, probably at threat from large companies like Amazon chipping away at their lead. So P&L is solid if you look at the P&L. Growth company. Technically speaking, anything above 18 in the stock is difficult. Anything above 19 is even more difficult. If you get to 21, that's an exit from a trading perspective. If you're an investor for the long term and you bought the dip, you just got a good entry. Don't add to it here. If it falls to 10, add to it then. Humana. We tried to buy the dip knowingly that the stock may go lower. I haven't changed my mind. So it was because of a discussion, not because I love the company. In fact, I avoid biotech and healthcare. This is the risk. This is the support zone. So if I took my trade, I'm not backing out now, but I realize that it's not ideal. Buy the dip moment. Sure, if you know the business, it's going into a prior bounce level, but it extends through 305, 304, 300. So you should know that it might go lower first. Intel. If it's a trade, you know that an approach of 22 would be an exit opportunity, but if you beat 22, you're probably going to 25. I would use that to exit completely out of it. I gave up on Intel a long time ago, somewhere on their earnings. This one, on this earnings, I said, okay, you got nothing. I'm done. I'm done. And then I went to here and it said, you see, you're not done. And I went to here. I was like, no, I'm done. I'm done. And look at what happened. The company is struggling for cash. It goes from ruling the world to struggling for cash. That's just freaking amazing. Samsara is a short. So it was a good buy the dip moment, but look how neat. Yes, it may get to 52 or 53, but that is let me rephrase. For as long as it's below 49 on a closing basis, it's at risk of coming down to 41 and 40. Okay, that's the deal with Samsara, which is basically just buying the dip. I don't know what this is. Iron Mountain Corporation. What is the question here? I honestly don't know what the question is. If you're asking me permission to go long, that means you already made up your mind you wanted to go long at all costs. Go for it. I would never consider it for myself. And there's no dip even to be bought. And to be honest, the P&L is good, but this stock is better than NVIDIA. I doubt it, but it's acting like it. So this is not an obvious entry point, and I wouldn't short it. IWM, longer conversation. That'll be in tonight's video. JJD, it's doing so. It's in this. I drew this from here, the white line. So it's doing the white line. It does have support at 24. I anticipate it holding. But if you don't hold it, you have a better entry point. So if you're long here, I get it. You better have a thesis though. Why? And you do have sellers above 28.50 and buyers below 25. So you're kind of stuck in a very tight range. Use the volatility in the options to trade your direction. So if you wanted to go long, sell a put or a put spread, buy a call diagonal, for example. JP Morgan, I closed my short in it and I will re-engage on the next rally. Great company. I'm just trading the stock successfully. It screwed me up one time a couple years ago. You were in on it. There was a credit call spread out of nowhere or credit put spread out of nowhere 2 Marches ago when we had a crisis in the financial world. And during the same week, the news media faked us all out with bogus fake news. And it was fake news in the sense where they rehashed an old headline on a week that crypto was having financial issues, and there were whispers of SVB, and they just piled on saying some bad stuff about JP Morgan. So this is where the editors go in and rehash all the financial articles or older articles they've been sitting on because it wasn't the topic. It wasn't a trending topic. And then during that crisis, March, we had a trending financial crisis topic. So they come out with everything bad. And then Iron Condor, we had shorted JP Morgan with a credit call spread, and then we added a credit put spread, and then the crash came in JP Morgan, which took out the credit put spread and took the money out of the profits out. So I got my money back and then some. So right here, there's nothing to do. This is a pretty good bank. If I own shares, I own shares. If I sell puts to own shares, so be it. I will short the next rally in it. I'm not engaged short with JP Morgan. Super solid buyers below, super solid sellers above. Coca-Cola, pretty good win. I've been asked, did you close? It doesn't matter what I did with my portfolio, because your portfolio is different than mine. If I have a lot of bearish positions and I wanted to close one, okay, close Coca-Cola when it was up 50, 60%. If I have very few bearish positions, why would I look to close a winning bearish position? So my answer should not influence what you do. Is the trade still viable? Yes. I think Coca-Cola can have a lot more downside. Target 1 of this red W is 65. Just so you know. Now, they could turn up and make a higher high because markets are that stupid. But this red W on this ticker can go to 65. LMT, same comment. Did I close? It doesn't matter. The trade is back to green on Friday, or this week was green again. And I'm holding mine. LULU, I bought the dip, and I think it's fine. And if I sold the put, I would take the shares. I wouldn't exit. And it has an opportunity to earn some kudos back above 280, although I do fear a lot of resistance at 280. This earnings box, the blue one that you see here, the teal colored box, the aqua colored box, Tom, should have sellers at the top. If they're able to break out of the box, they might get to 295. I'm long either way. I'm not needing a rally. I sold puts or put spreads on bad days, and I would stay in them. LUMN, what do they do? Okay, so I don't know what this company does. I'm not a fan of the P&L. This looks like a meme stock. If it is, I want none of it. Trading wise, above 650, you can get 8. And you have buyers at 5 and 450. Don't lose 450, you go to 3. Okay, airlines, not my favorite. This is the upper end of the range. I would be exit. This here looks like an exit point more so than an entry. But Nick, there's an inverse head and shoulder. Whatever. Okay, you buy calls for that, not me. Anything above 31 is a sell zone. Anything below 2650 is a buy zone. Just ping pong inside that range. I believe Southwest is also changing their cattle call. Like now you have to reserve seats. I can't imagine flying an airline that does not allow me to reserve a seat. There is no way I'm flying that airline. I would rather drive or not fly to that city. 4150 is a catalyst, but also a very hard resistance line. 4150 will get you to 4350. Solid support through 3850. So buyers into that. If for whatever reason you lose that, you go another $2 lower. So it looks like we're stuck within a tight range, and then there's another solid range outside of that. So range bound, any which way you slice it. McDonald's not range bound. This here, folks, is an exit opportunity, not an entry opportunity. Solid P&L. So maybe this is going on. So this happened here and happened here. This one is overdue, but I would not go long any stock going into a prior fail like this. In fact, if it does go to 305, I would be tempted to short it with a bear call spread, debit put spread. Because that would be, if I was a market maker, I would poke above this and then turn around and take a beeline lower. And not an obvious entry opportunity for a trade or an investment, actually. Mongo, if you bought the dip, kudos, and you're too late to buy the dip up here. You're running into the neckline that caused you the great rate. There's a decent chance of revisiting 260 or lower. I would not start longs up here. Buy the dip into 270 or lower. Meta. I don't know what to make of this company. They should promise the moon. It should be unshortable. They're making gobs of money right now. Look at the P&L, amazing. And they're promising a new source of income, which I haven't heard any updates on. Like, where are we with the metaverse? The glasses. In fact, Apple, what happened to the glasses? Anyway, so 535. zone or higher should be difficult, but I totally respect it. So I would not short it because it's a multi-headed beast. I would like you to look at 544 and tell me what happens if it goes above 544. So this is one of those stocks that you're going to have to focus on this week, because the most intriguing ETF this week is the QQQ, not the SPY. So this probably represents the QQQ more so than the SPY. So the spirit of it. So 544 will probably mean the stock market is in a breakout or not. I wouldn't short it. If you're long, I get it. I know why you're long. So here's the thing, though. Fundamentally, I have a feeling they're going to be sued and there's going to be giant scandals, because I know they're cheating us. I know it. I'm very confident of that fact. But I can't prove it. So maybe it goes on for years. Don't show it. MGM, not a bad long, although I would rather, if I'm not long, I don't want to get long into 38. Looks difficult, so buy the dip. The closer to 35 or 34.50, the better. It goes without saying, you lose 33.50. I have no idea how low it goes. 3M, shortable up here. Look at the P&L, boring as fudge. What's with the rally? Did they get bought out? What is going on here? This here is an exit spot, not an entry spot for me. I believe we shorted it up there and we did well with it. I wouldn't short it here, but wow. I mean, what's going on with this violence with this P&L? I don't understand this. Let's look at the fundamentals. What do they do? Safety, transportation, healthcare. Very strange. So let's see how expensive they are. Weird P&L. So I don't know. Evaluate it on your own. Technically speaking, as close as it is to 145, I wouldn't touch it up here. Same. So are these staples? So I'm tempted to go out and short the XLP if I'm not short the XLP already. Yep. So trade the XLP. If they are part of the XLP, these companies we're looking at, like MO, okay, it's in the letter R, and look how it faded off the letter R. So if you read the letter R from last week or whenever we put it there, and you exited into it, now you can re-enter. Look for a re-entry if you still like it for the long term. Merck, it's inside of a support zone, but it's also stuck below 122. Anything above 120, it looks like an extremely tough situation to overcome. And it doesn't look that difficult to lose 110. And if you do lose 110, you probably get to 100-ish. And we're not going to talk about losing 100-ish. Moderna. I would never invest in Moderna just because it's a headline stock and I don't know what's going on in there. Okay. It has absolute hate from the retail investor, which doesn't matter because they're not the ones that actually make it money. But I know smart people that believe in it for the long term. And if you're one of those people, just take a nibble long and you don't know what they're going to do in the future. It could be at 170, 180. It could be at 10. I have no idea, but it's worth a shot. It is a speculative bet on a company that was the talk of the town during our most significant global crisis in our lifetime. So maybe it's at 30, maybe it's at 140. I have no idea. It's worth a shot. Take half of a position on the long side. And if it goes to 30, take the other half and forget about it. And I would count it as a speculative bet. So no different than buying stock in Lucid. In fact, Lucid might be safer because they do have something they sell tangible right now. Who is this? Okay, so we're long this stock. We sold put spreads on a bad day, whenever. So I would just repeat the process. I don't think they can break out of 79. If they do, then they get to 84. Exit there. But they will buy the dip. I'm confident of that. I would sell a naked put in this one. on bad days. Let's say this next couple of weeks, some reason we wake up and this thing is falling into 70 and 68. I would come out and sell puts in the low 60s or high 50s to own shares there. That's what you do with good companies. That's what Buffett does. If you were in the live room, you know what that was all about. That's an oarfish, and the stock price looked like an oarfish short term. And apparently the I think it's called an oarfish. Anyway, it surfaces when there's an earthquake coming. Look at it. Doesn't that look like one right there? Anyway, that's the conversation we're having. It's going into a prior. So anything inside this red box that we're heading into is a sell zone. So I would not be long the stock into this red zone if I'm. There's no rush to own stock into this. Wait. What happened to the oarfish? Okay. Let's talk about the stock itself. Microsoft, excellent company. Investment-wise, I'm all on board. It's gone. We killed our oarfish. From an investment perspective, if I own it, I'm not doing anything. I own a great company for the long term. I would probably sell calls against my shares or calls against the calls I own. The fact that they're above 425-ish, this prior fail right here, is gives the advantage to the bulls. So now they can think along the lines of buying dips to tackle the highs. This also would be a pivotal stock to look at because it does represent what's going on with the QQQ. It's been acting way better than NVIDIA. Better, I mean like more predictable, given how good the company is. NVIDIA is like one day it's this, the 1 minute it's falling off a cliff, the next minute it's skyrocketing. This one is acting more maturely. Solid direction and maybe solid resistance into 436 and 442. We'll see what happens there. Micron, buy the dip mode. Yeah, that was the thing to do. And I would love to talk to people who wanted to chase it up here and did not buy the dip that we got in it. It's like, okay, have you changed your mind? It looks like solid support into 80. I personally wouldn't invest in it, but it's definitely investable. I am just questioning the P&L. That's it. My beef with it up here was the P&L. Down here, as an investment, if you bought the dip or are thinking of buying the dip, solid. Just make sure to leave room to double your order in the next few months. If we have a correction in the market, this one may end up in the 60s. Not my words, but they may end up in the 60s. I would enter it with a lot more confidence in the 60s. Let me see if I nailed the level. So anything below 70 would be super solid, which means you can sell puts there right here, right now. Netflix, great company. We did an Iron Condor that didn't work, worked, and now did it expire already? I don't remember. Anyway, solid P&L. If you break out of this teal box, if you beat this prior fail, you're probably in the 750s or 60s, maybe even more. You have $70 of upside potential over a period of time. So don't short it for no reason and have the courage to buy the dip. The first level it would be interesting at, which would be Friday's low, 680. Are you kidding? The second level more interesting is 665, 666. Anything below this candle. Now, if you lose 660, buy the dip anywhere below 640 to 630. All these are short-term swing trade comments. If you're long, stay. Nike, no decision. I loved it down in the bottom, but I didn't sell puts because there's no premium. I said buy shares, half the position you want. And if I did that, I would have been out at 85. Then I would be rebuying right here. Swing trading can be active too. Solid support below. I wouldn't be surprised to see it at 75. I think it's very difficult for it to break out of 83. ServiceNow, too high for my own taste. Put it on your to-do list to buy the dip next time it happens. What is this white box that I have? I think this was an earnings box of something. That can't be. My gosh. Anyway, ignore the white box. Any dip into 800 would be buyable. Oh, I remember what that was. I totally do. Months ago, we were discussing this stock. I said if I wanted to trade this stock, I would sell a strangle inside this white box for a period of time, like the end of this year or something. So if you did that, that trade is still probably viable. Don't do it, but that was the discussion of the white box. NRG, it was a short 2-3 times. I would not be long energy up here. Just be careful how to time your entry as an investor. Even as a trader, you're going into these. So yeah, you can see the breakout opportunity above 85.5, 86. How about dealing with 82.5 first? Super strong resistance. You do have support at 76, so don't lose 76. And do take out 85. That's the range. I still think it's shortable. This one is short with a stop as a chart. This company is going into this, which is fail. It's probably going to dip to 14-ish. Super solid support at 1340 for now. If you lose it, you get to 1240, which would be a better entry point. This is a significant range from the earnings. Respect it. It's below you. That means it's support. So any approach of the middle of that box, which is 13, is a solid entry point. If you own it for the long term, none of what I said matters. If you bought the dip on 8.5, if you had the guts to buy the dip on 8.5, high five yourself, do a little jig, because that was an amazing trade. And just get ready to do it again. NVIDIA, big conversation tonight. QQQ. NVIDIA represents QQQ very well, represents the S&P very well as well. But here's the question. If NVIDIA is the best company on the planet right now, and it is, why is it so far away from its all-time high when the market is actually setting an all-time high right now? Just ponder this a little bit. So I've said it before, and I will say it again. NVIDIA is the market is NVIDIA. And the fact that we have that discrepancy means that this week is a pivotal moment for the stock and the market. Last week, what you guys did, I'll talk more about this in tonight's video. This is the third time, if not the fourth, I'll have to do the math, where NVIDIA saves the market, like black and white, saves the market when it needed it the most. This is a manipulated market, and this is the tail that is wagging the dog to control the manipulation. So the markets are always well organized, so not to say manipulated. But these days, they're doing it so blatantly, they don't even try to hide it. I don't know what's going on with the SEC, so respect what the market makers can do, whether it makes sense or not. So bears, you got to respect the bulls, and the bulls, you got to start respecting the bears, even though they're not here. There are no bears. But the bulls are, what did we call it? Cocaine bull. If you don't know what I'm talking about, go watch a movie called Cocaine Bear, and then you will get it. Dips into 112 and 110 and 106 are buying opportunities. What time did the video comes out tonight? I'm not sure. Depends on what happens with the market and my time frame. I should commit to making it by tomorrow morning, actually. NVDL. I don't know why people trade NVDL. Is NVIDIA not violent enough for you? I personally would not trade NVDL at all. I wouldn't touch it. I don't think the premiums are cheaper. Maybe they are. Anyway, so here's, let's see here. Here's NVIDIA. And here's NVDL. Everything I say about NVIDIA applies to NVDL. I don't think I said enough about NVIDIA. Okay. An approach of 126 is a selling zone, and 126 is a massive pivot, and I mean it. 118 is as well, and then we have some subsets now. 112 seems to be, okay? and 108 now stepped up to the plate. So I would be in the buy the dip mode for NVIDIA. Target 1 could be 112. Target 2 could be 106. Meanwhile, if it takes out 126, it could be a 135. This is about, it looks like the 38.2. Okay, so 618, same thing. So they bounced halfway and then some. So this is the golden zone of this correction. It's a natural spot to rest. I don't have to remind you that we called the potential down. We said target 1 of the red W, target 2, not easy. They did it, and they almost went to target 3. That was this box. And now they're bouncing. If these W's played out, this is part of the W. This is the 61.8 retracement. So they're 1/3 from the top, 2/3 from the bottom. So it's 50% plus. Very important. Don't hope. So everything I said here, over there, applies here. And that is video 3. We're going on to video 3 next.